Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Wednesday, the 13th of June, 2007, and the market's closed. I'm going to start out today by looking at these ProShares, the inverse S&P fund, the leveraged S&P inverse fund. And I started out with this morning as well. Before the market opened, I posted a chart pointing to this huge volume that we've seen in here yesterday when it looked like we were going to get that retest, and it really looks like people loaded up on the short side trying to gain exposure for what I think a lot of people were expecting a real big smash because of these interest rates. Well, interest rates seem to have calmed down a little bit today, and it looks like those bearish positions that were put on yesterday, probably people regretted them pretty good today. And I'm going to point out in here again that there's nothing wrong with taking a trade in this market when it starts advancing on a short-term time frame like we saw right in here, coming back above that 5-day moving average to maybe hedge your overall portfolio. But when the 50-day moving average is declining like we see here, I consider this trend still down, and most rallies are going to fail up near that level. So if we take a look at the spiders, you'll see that they gained 1.5% today. They were up $2.35, so a big gain there. Unfortunately, it didn't get that washout that I was hoping for early on, but we do still see that this 50-day moving average is a very key level of support right now in the short term, and that's going to continue to be the case, it looks like, going forward here short term. Now, if we look at the 10-minute time frame, I'm going to hang that up. If we look at the short-term time frame, we can see that this 5-day moving average, which has been declining and acting as resistance here the last 4 or 5 days, was tested. You know, a lot of times a moving average, it just gives us an indication of trend. It's really a mathematical trend line is all it is. And like a trend line, the more times that it's tested, the more likely it is to fail. And we see that it's starting to flatten out. Now, what I would expect in here is, now we've got the market back up to the level where we found resistance on Monday. And I wouldn't be surprised at all to see a pullback somewhere maybe down towards these levels, but it looks to me like the buyers are starting to gain the upper hand in here along this rising 50-day moving average. You can see the 10-day cross through the 20-day moving average. To me, that all that means is we've reached a phase in the market where it looks like a correction is due, at least time-wise. It doesn't mean that the prices are going to pull back, but there's two ways the market's correct, either price-wise or time-wise. And when we still have the primary trend higher, I think we're going to get more of a correction through time, and that's going to be just marked by choppy trading. I think we'll still probably see a retest back up in here at some point, but for now, it looks like we've got a pretty big range maybe setting up, 148 to 154 or so. Might be early for that call, but that's what it's looking like to me. I think we're still going to see, like I said yesterday, earlier, maybe a pullback tomorrow, and then we can squeeze these shorts a little bit as well. But right now, realistically, I think that the market is still trying to gain its footing, and it looks like, again, that the buyers are taking back control. They made a higher low, it broke past resistance, and then really jammed it to the short sellers here in the second half of the day when it broke back above that 151 level, which was resistance earlier on in the day. And you saw that it looked like it was going to break down here, but it held onto the gap, it held onto those lows, and the sellers had their chance, and then this is where the shorts got squeezed. So a very constructive day for the S&P 500, which does remain in a primary uptrend. That remains unchanged, and there's not really much that's going to change it in the short term, I don't think. The Qs, the Nasdaq 100, same thing here. We got a little bit more of a bounce in here today. These were up 51 cents. 1.1%, so not quite as strong as the S&P 500. A lot of people are pointing to this, and it does kind of look like potentially a head and shoulders. You can see it a little bit better on like a 60-minute time frame. It becomes a little bit more clear here, but it also looks like it's broken past that, what looks like the right shoulder. Now, it's broken the downtrend from there. It doesn't mean it's broken out past it. What we really need to see for the buyers to regain control, I think, is a move past about $47.30. Then you can look at this as a successful test down in here. But overall, the pattern to me remains more neutral than anything. In here, I wouldn't be surprised at all to see a pullback down towards 46.80. before we could see if the buyers regain momentum and push it back above that 47.20, 47.30 level. But it looks like, again, in here when we back it up to the daily time frame, what looks like just a big range-bound market. You could make a case, again, that it's a head and shoulders top, but until it actually breaks down, it's completely irrelevant. What it does mean, though, is we kind of just have to be on our toes and be aware that this is more of a trader's environment than anything. What I think I'm going to do is maybe post a video later with ideas for tomorrow on it, but I'm not going to give any specific instructions when we have a volatile market like this, because if I say here's your stop, what it typically ends up happening is you're going to get stopped out of 9 out of 10 of the positions that I may mention over the course of a couple days. But if you're a good trader who knows how to adjust price stops during the course of the day and understand the type of market environment we're in, that you have to be a little bit more aggressive, then I don't mind providing the ideas. The SMH, the semiconductors, these guys were up 2.1%, so they outperformed once again. And it's very important to see that this 36 level and the low that was called in here at 35.5, 35.55 has acted as support. We've still got, again, this is why we give the benefit of the doubt to the buyers when we have a rising 50-day moving average, because they've clearly taken back control. We've seen a higher high. This little downtrend in the semiconductors is now broken. This is what I consider to be our higher low. So I think that about $36 a share, breaking back below that level, that's going to be a potential problem. But here in the short term, the other day I said here we have a potential for an inverted head and shoulders pattern, and it hadn't broken past that neckline until this afternoon at 36.80. So if we take 36.80, measure down to the low of the head, 35.60, that's $1.20. What that would indicate would be a target up near $38 a share. Now, I'm not necessarily calling for that, but I think it's reasonable to be aware of it, that we have the possibility that could happen. We also broke, potentially you could look at it as we broke these two little downtrend lines and this resistance. So perhaps we're going to head back up towards that $38 level. I think it would take a lot of people off guard, but we've still got a nice healthy uptrend here on the weekly time frame where this prior resistance has acted as support. So if we have to go back to the bigger picture and take a look to make sense of these smaller moves sometimes, and it still looks like a very bullish, just a pullback within this bullish uptrend that's just begun. So 38 may not sound, may sound aggressive. It does to me, but the path of least resistance is higher in this market. So I think that it's not unreasonable to think that it can be attained. The IWM, that is the Russell 2000, once again, the 83, well, first of all, it broke the declining 5-day moving average. That's starting to flatten out maybe a little bit. You can make the case. Not quite yet. Maybe a little bit more room in here. But came right up to that $83 level once again and got turned away. So that $83 level continues to be trouble, and I think that what it's going to take for the buyers to really gain back control with a little bit of conviction is a move past this level right here at about $83.30, which was this prior support right in here. We have broken this little downtrend line. Downtrend breaks don't make reversals. The trend line breaks don't make reversals, but they are an important sign, particularly when we see a resistance level taken out that does subsequently act as support. If it can keep holding above that, then we're starting to build the foundation for the potential of a move higher in the IWM as well. So things are starting to look a little bit more bullish. We do have options expiration coming up on Friday, so anything can happen. Just remember, the defense wins this game.